Hi, everyone. Thanks so much for joining us on what has been a huge week for financial markets. Now, normally we're talking about the Fed or some economic data. Well, there's something that goes above all of this, and that is Donald Trump and his tariffs, the threat of a trade war. They are alive and well this week, or well, they were. So he slapped 25% tariffs on Mexico and Canada that were meant to come into effect on Monday night. However, they have now been delayed by a month. So we've seen market sentiment rise and fall, but mostly dip this week on the back of these tariff threats. So we know that tariffs are a real negotiating tool used by President Trump. And it turns out the negotiations may not have gone so well as they did with Canada and Mexico, but with China. That's because 10% tariffs did apply to all China imports to the US on Tuesday. China has retaliated as was expected, however, by not as much as expected. So remember, the US tariffs on Chinese goods, they are 10%, they're broad-based, and they're across every import. There's only a very small amount of tariffs that China has applied on US products, and it's also put in an antitrust investigation on Google. So all of this tit for tat, that's what we can expect going forward. So we haven't seen a massive decrease in risk sentiment, but we have certainly seen stock markets get impacted. But where we're really seeing it is in the FX market. Now, if we look at chart 1, this shows euro dollar and then dollar mex, but it's actually inverted. So you're seeing how the Mexican peso is performing against the US dollar. As you can see, both the Mexican peso and the euro, they are falling together because even though the Eurozone doesn't have tariffs yet, it is in line for tariffs and we are expecting them to happen. Mexico has obviously been impacted by tariffs, although it has got this 30-day reprieve. So as you can see, what we're seeing now, as we digest what tariffs actually mean under President Trump, we're at very low levels, but we're trading sideways. So we're consolidating at very low levels in the euro and in the Mexican peso. If we look at the euro in a little bit more detail, what you can see is that euro dollar hasn't reached parity yet. It's essentially trading between 105 and 103 versus the US dollar. It did fall below 102 at one point, but that was a very short period of time. So it suggests that there are good supports on the way down to parity, but we do think it will reach this level. So it is extremely low, but as the tariff and the threat of a trade war is essentially de-escalated, certainly with Canada and Mexico, that's having a more calming impact on the FX market, and it is weakening interest in the dollar. Now, in stock markets, it is slightly different. If we take a look at chart 2, now this chart looks a real mess, but don't get too overwhelmed by it. What it shows are car makers in the US and in Europe. So in there, you've got BMW, you've got Volkswagen, 2 German brands. You've got GM and Ford, they're the US brands. And you've got Porsche, which is, of course, the very luxury high-end German car maker. What's very, very clear is that all car makers are kind of falling together. So whether or not they're European or they are US car makers, they are all declining. And the outperformer, well, that's Porsche. There's something that some consumers will find Porsche, that they'll buy a Porsche regardless of tariffs. They find them reassuringly expensive. So that luxury car maker is outperforming. Now, that is to be expected. What I think is really interesting is that the Ford is the weakest performer so far this year out of those car makers that I'm showing you here. So it does show that US companies are also negatively impacted by tariffs and the tariff threats. So for a couple of reasons. Firstly, because of retaliatory tariffs, and secondly, because of weakness and hurt to both the domestic economy in the US, but also to the global economy. So that could reduce demand for these big ticket items like cars. So cars are very much in the firing line for Trump's tariffs, even if Trump's tariffs haven't been as bad as some had feared before he came into office. Now, this really is dominating market sentiment, and we're not really seeing the foundations for a stock market rally. We are, however, seeing a lot of uncertainty in the markets. Now, we also have NFPs later this week, and we have a Bank of England meeting. And on top of that, we've also got more earnings releases. So all of that is playing out here. We're looking forward to a lot of trading. There is excess volatility in the market. Bitcoin, for instance, has also been trading alongside stock markets. It's down a further, is below 100, that key $100,000 level. So it's also impacted. So it looks like those Trump trades are really falling off the wagon as tariffs become a reality. So thanks so much for joining, and please do join us next time.